The economy of America runs completely on the expenditure of the people, but now the situation is deteriorating rapidly. Inflation is increasing. People are avoiding buying essential items and credit card debt has reached a record level. Interest rates have gone up to more than 20%, due to which people are not able to repay the loans taken. Retail sales have fallen drastically, and big companies like waLamart, Target are also facing losses. If the economic crisis deepens in America, then its effect will not be limited to it only. Pressure will also increase on big economies like India, China, and Europe. If the dollar strengthens, the value of rupee may fall. Foreign investment may decrease and inflation may increase further. Is America heading towards a big economic crisis? What will be its impact on India and the rest of the world? And what changes can be seen in the coming days? Watch the full video to know the answers to all these questions. The American economy is heavily reliant on consumer spending, which accounts for 68% of the country's GDP. However, the current economic situation is worsening rapidly. Inflation is on the rise, and people's incomes are failing to keep up with their expenses. Credit card debt has surged to historic levels, while interest rates have climbed to over 20%, making it increasingly difficult for ordinary Americans to repay their loans. This has directly impacted retail sales, which have experienced the largest decline in the past 2 years. As people cut back on spending, even retail giants like Walmart and Target are reporting losses. If such large corporations are struggling, it's clear that small businesses are facing an even tougher challenge. To cope with inflation, many Americans are relying on credit cards for everyday expenses. Since 2022, total credit card debt in the U.S. has been steadily rising and has now surpassed the $1 trillion mark. This indicates that a significant portion of the population is spending beyond their means and living on borrowed money. In the past, American households had substantial savings, but that trend has reversed. Savings accounts are dwindling, and more people are resorting to loans just to cover basic bills. In response to rising inflation, the U.S. Federal Reserve has been consistently increasing interest rates. While this is intended to curb inflation, it has made borrowing more expensive across the board. Whether it's buying a home, purchasing a car, starting a business, or taking out any type of loan, the cost has become prohibitively high for many. This combination of high inflation, rising debt, and increasing interest rates has created a challenging economic environment for both consumers and businesses alike. The impact of rising interest rates is twofold. People are now hesitant to take out new loans, while the monthly installments on existing loans have become significantly higher. This surge in interest rates has also disrupted the U.S. housing market. In the past, buying a home through a mortgage was relatively accessible, but now, with loan payments skyrocketing, many are postponing home purchases. As a result, the real estate markets in major American cities have begun to stagnate. The broader decline in the U.S. economy is also taking a toll on jobs. As consumers cut back on spending, market demand shrinks, directly affecting corporate earnings. To cope with these financial pressures, many large American companies have resorted to mass layoffs. In 2023 and 2024, millions of workers in the tech, automotive, retail, and other sectors have been let go. If this trend continues, the unemployment rate in the U.S. could rise further, potentially pushing the country toward an economic recession. The wave of layoffs in the tech sector began in late 2022 and has persisted through 2023 and 2024. After rapid expansion during the pandemic, companies are now scaling back as consumer spending declines and business pressures mount. For instance, Google has laid off thousands of employees in 2023 and 2024, shutting down entire divisions in an effort to cut costs and streamline operations. This has left software developers, data scientists, and other professionals out of work. The trend toward automation and cost-cutting is also affecting traditional industries. Tesla, for example, recently laid off thousands of employees to reduce production costs, citing increased automation as a reason for reducing the need for manual labor. Similarly, other auto companies are following suit, reflecting the broader economic challenges facing the nation. As businesses continue to prioritize efficiency and cost reduction, the job market remains under significant strain, raising concerns about the long-term health of the U.S. economy. The automotive industry is increasingly shifting its focus toward electric vehicles, a transition that has already led to the layoffs of thousands of employees. This impact is particularly evident in plants that manufacture traditional petrol and diesel cars, where job cuts are more pronounced. If the US economy slides into a recession, the repercussions will extend far beyond its borders, affecting the entire global economy. Major economies like India, China, and Europe will face significant challenges, and the ripple effects will be felt by all of us. One of the first and most immediate consequences of a US recession would be its impact on the dollar. In times of crisis, global investors often flock to the dollar as a safe haven for their capital. This surge in demand for the dollar could weaken other currencies, including the Indian rupee. A weaker rupee would likely exacerbate inflation in India, making imported goods more expensive. This in turn would affect everyday life, driving up the cost of foreign travel, petrol, diesel, and other imported products. The value of our hard-earned money would diminish, and daily expenses could rise significantly. Foreign investment, particularly FDI, foreign direct investment, plays a crucial role in India's economic growth. A weakened US economy could lead to a decline in foreign investment, as investors may withdraw their funds due to increased uncertainty. This would create challenges for Indian companies, making it harder for them to secure funding for their operations and expansion. The ripple effects could slow down job creation, stifle the growth of new startups, and dampen innovation in the market. Small businesses and startups, which rely heavily on external funding, would find it even more difficult to access the capital they need to survive and thrive. In short, a US recession would have far-reaching consequences, not just for America, but for the global economy, including India. From a weaker rupee and rising inflation to reduced foreign investment and slower economic growth, the effects would touch every aspect of our lives, making it a
This situation will have a significant impact on economic growth. Another major consequence of a U.S. recession would be its effect on oil prices. Uncertainty in the global market could cause crude oil prices to spike at any moment. As one of the largest importers of oil, India would be particularly vulnerable to these fluctuations. With inflation already a pressing issue, volatile oil prices could drive it even higher. This would lead to increased costs for petrol, diesel, and domestic gas, putting additional strain on farmers, traders, and ordinary citizens. The rising cost of living would further burden household budgets, making everyday expenses more challenging to manage. India exports a wide range of products to the U.S., including IT services, pharmaceuticals, textiles, gems, and jewelry. A recession in America could reduce demand for these goods, directly impacting Indian businesses. Many Indian companies rely heavily on the American market, and a downturn could force them to scale back production, leading to job losses and slower economic growth. Additionally, Indian businesses would need to explore new markets to compensate for the decline in U.S. demand, a process that could bring instability and operational challenges. The effects of a U.S. recession would not be confined to America alone. They would ripple across the globe, with India facing significant challenges. A falling rupee, declining foreign investment, rising inflation, and reduced exports could create a crisis for the Indian economy. The question is, are we prepared to face these challenges? Only time will tell whether the Indian government and businesses can devise effective strategies to navigate this potential crisis. One thing, however, is certain. The impact of this recession will be felt by everyone, and preparation is key. If you found this information valuable, please like and subscribe to stay connected with all our upcoming updates. Thank you for watching, and we'll see you next time.